Nirmal, hi, good morning. Good to have you on the
Good
show.
morning.
I'm just looking at your earnings right now. The one segment that witnessed pain in credit clearly has been retail. And you have a high exposure to this segment as well. How do things stand for the month of July? Is normalcy returning? Is reopening expected to play out for your business as well?
Yeah, thanks. So we have 95% of our book is retail, and our normalcy is definitely returning. We are seeing that collection efficiency in the month of July was better than June, and June was much better than April and May. So things are getting back to normal. And the asset classes that we operate in, gold loan and home loan, these are the two businesses that basically account for dominant part of our loan asset portfolio. They have been doing pretty well. We are seeing that. Of course, there's a lot of talk about stress, and there are some segments or some geographies where lockdown is still there. But there, the bigger impact, what you see is in business loan segment. So if you look at our portfolio, then microfinance and unsecured business loan, they together account for 14% of our loan assets. And that is where we are seeing some stress. But even there, we are seeing recoveries, very healthy in last couple of months. Things are bouncing back to normal in most places, in most of the areas and locations that we operate from.
Sure. How soon can we expect collections to go back to pre-COVID levels? And I want to talk about the home loan segment here in specific because, one has seen that there has been a sharp spike up and a pickup in the residential sales at least, and the data seems to be indicating an uptake. Of course, you can debate many factors which are at play, the stamp duty cut, interest rates are low, all that really aiding to the move. But what about collections? Where are they as opposed to the pre-COVID levels?
They are pretty close to pre-COVID level. And the way things stand, even the month of August and September, unless, the COVID wave 3 or, something unforeseen happens, if things normalize, then we are seeing that this month and next month, we should be pretty much there, almost close to pre-COVID level in terms of our collection efficiency. So even the month of July was pretty good. I think at least in home loan segment, I can say that, the normalcy, if you can define as pre-COVID level, should not be far away.
How are you preparing yourself for a third wave? I mean, is there a thought in terms of putting a framework into place, God forbid, if we have a third wave?
So, even for third wave, first of all, we are given free vaccination to all our employees. And other than that, you have to play both sides. So if you're very conservative for third wave, you don't expand and you don't let the business grow, you may lose out on the opportunity. So as far as we are concerned, we think that third wave, even if it's there, it'll be very mild and very quick. So we saw that second wave was very brutal, but from the economy or business point of view, it was very quick. The steeper the rise, steeper the fall was, and it got over. And when it happened last year, we did not have a playbook. People did not know what will happen, how to run businesses. But now I think, most of us have learned to live with COVID. I mean, we can work from home. Things can work digitally. Even collection and all those things, can work with much lesser physical or in-person meeting than what it used to be. So I'm particularly not too worried about third wave. I think that vaccination has already covered almost about more than 1/3 of our population, and if you take adult population, then more than 40% of it, at least the first dose. There have been reports that almost 65-70% of our population already have COVID antibodies. So, kind of herd immunity is there, already there. So even if there's a third wave, I would say that, one should not be unduly perturbed or worried or concerned about it, but maybe take it in a stride, be prepared for it in terms of safety of employees, workplace, and doing things digitally as we have been doing. But other than that, I think we have to play it by the ear and see what happens.
Okay. Are you getting enough and more confidence that it's time to start growing the business, or time to be careful? Because each lending institute right now is following a strategy which is based on the judgment of the economy. You got in Kotak, which is saying that, look, we want to be very careful. You got SBI, which is very gung-ho on the economy. You got Bajaj Finance, which has reported an uptick in delinquency, and so is HDFC Bank. What is your read? I mean, is it time to grow aggressively and use the market conditions to your advantage, or it is time to protect, it is time to conserve and go easy?
Because I think this is a time to grow for lending institutions, because the economy is bound to bounce back, and there'll be demand for credit. When people get back to their businesses, they need working capital, they need loan. Many people who have deferred their home loan purchases, they will need to buy. So I think there'll be a great opportunity. The good thing about the post-crisis recovery is that liquidity is easy and the interest rates are low. And there's a demand to rebuild and restart your business. Credit demand is strong, and liquidity is also good. So this, I think, is a very, this is a very positive and a conducive environment to grow, with reasonable aggression. I won't say that you have to go overboard, but I think this is a time to grow rather than be cautious. If you have to choose one, then I'll say we'll put our strategy on growth and not on caution.
Mr. Jain, I just want to also talk about your broking business because, I mean, with the kind of participation we've been seeing in this last 1 year, I'm sure you've seen a tremendous amount of acquisition on that front as well. But along with that, there's a lot of competition too that's hotting up. You also are, sort of building on your digital platforms. So how do you see that business shaping up? How are you strengthening your own digital offerings to attract potential investors?
So I think this strong wave that we are seeing in terms of new customers and is kind of unprecedented. And there may be many factors might have converged, the rise of millennials, people have free time, so they're trading, or there are more savings because they're not spending as they would have otherwise, or people want to protect their investments or their savings against inflation, and bank interest rates have fallen. All these factors might have contributed in bits and pieces, at different in different way. But the business is growing, competition is there, and any growth business will have competition. There's no doubt about it. But I think that your question is very valid and important. That how are we shaping up and how are we scaling up digitally? So we have we have been internet-first company right from the day we started, and we invested a lot in technology in the last couple of years. During the COVID period, actually, we have accelerated our investment in digital technology. There are a number of new ideas, thoughts, and technologies that are coming, and we believe that our platform, which has got several million downloads, and even the several million downloads and several 100,000 reviews, its rating has been around 4.3, 4.4, which I believe is very good, and that also shows that we are at the forefront of cutting-edge digital technology. And I think the entire organization, right from CEO to everybody, is thinking about how we can make our product and offerings more attractive digitally, how we can service our customers digitally better, and how we can make their investments more rewarding in a digital way. So as far as securities business is concerned, I think it's completely transforming. All is going towards almost becoming like 100% digital. The retail part of it, at least.
All right. What's the mix like today now for the IIFL Group? How do you see the different businesses contribute to the group today?
So, the three core businesses that we have: wealth, our finance, and securities. All three of them are doing well. All three of them basically are very positively or have a much higher beta with the economic growth. So our wealth business also, we are seeing very strong growth. As you would have seen our last quarter, the momentum in terms of new asset acquisition as well as profitability has been there. And now we have over 2 lakh crores of assets under advice and management. We are seeing that as India grows and entrepreneurs are also exiting part of their businesses through either getting direct investor, private equity or foreign investor, or IPO, a lot of liquid wealth is getting into their hands, and therefore we see tremendous opportunity for this business to grow. In our lending business, we already spoken, we are focused on retail. We are expanding our branch network this year. We are planning to set up 700 new branches on top of 2,600 that we already have. Here, our focus is on completely small ticket retail. Almost 95% of our business is already granular retail business with small customers. So we'll expand in the same way. And again, when you do small ticket loan, the digital technology helps you a lot in saving cost and improving your credit underwriting and also servicing the customer better. And the third business is our securities business, which has retail as well as institutional segment and investment banking. All of them, I would say, touch wood, are doing pretty well now, given given very strong undercurrent in the capital market. All businesses at this point in time are growing well, and we don't have any plans to diversify. So we will consolidate and will remain focused on these three businesses.
Well, glad to hear that. And Mr. Jain, thank you so much for joining us today on ET Now. All the very best.
Thank you.